Hey everyone, happy Friday to you. Welcome back to another week. For those of you just now joining our series, my name is Zack Benjamin with the Benjamin Group. But as promised, I want to talk about Roth conversions and backdoor Roth contributions today. I may have touched on this in some other videos in the past, but the idea that you are able to sock away more money in a tax-deferred and tax-free vehicle can be huge over the long run. Let's take a second and think about where we're at as a country. Taxes are most likely going to go up at some point in the future. We're all trying to find ways to avoid paying taxes. So the idea that you can accumulate all this money in a Roth IRA is very enticing. So let's talk about the strategy itself. So backdoor Roth contributions. It sounds more complicated than it really is. I know this is advertised online a lot, maybe just to me because this is my industry. But if you've never heard of it, let's dive into a couple of steps to make this very clean, easy, and simple. So if you are a high income earner, you are likely not able to contribute directly to a Roth IRA. Yes, there are income limits for you to be eligible to contribute. Why? Great question. Personally, I don't think there should be, but we'll leave that for another day. So let's say that you can't contribute to a Roth IRA. There are also income limits on being able to deduct your IRA contributions, with the emphasis on the word deduct. But you can make any amount of money and contribute to an IRA account. So all you would do to make this happen is you would contribute to an IRA account. This year, if you're under 50, $7,000. If you're over 50, it's $8,000. But you make that contribution and then you immediately convert it to a Roth IRA. Is it possible they change this quote unquote loophole in the future? Certainly. But right now, that's how the rule stands. Sounds pretty simple and easy, doesn't it? Now, there is a caveat though. There is something called the pro rata rule. Meaning, for this to be a clean process and for you to actually get the benefit from it, you cannot have any other IRA accounts or a balance in an IRA. For example, let's just use easy math, and let's say that you had an IRA with $100,000. You're watching this video and you say, wow, I'd love to put money into Roth. Let's start doing that. So you open up a new IRA, you contribute $7,000 to it, and you convert that money to a Roth. You're thinking, perfect, I did it right. I contributed my $7,000 to an IRA. I didn't get the tax break due to my income, and I'm going to convert it. No taxable problems there. However, I mentioned you already have an IRA account with $100,000 in it. In this situation, the IRS looks at you having $107,000 of IRA or qualified money. Meaning when you go to do that conversion, that $7,000 conversion, they're not going to look at what you just recently contributed. They're going to look at the entire pot of money. So you would then end up owing tax on just about all of your conversion to the Roth. But if you don't have an IRA account, again, this is a very simple and efficient way to make this happen and get money into a Roth IRA that can benefit you hugely over the long run. Think of it as sneaking into VIP access at a concert. It's not talked about. People think it's really convoluted and confusing, and really it's just one extra step to make it happen. We do it all the time with a number of clients, so if it's something of interest to you, please let me know. Have a great weekend and we'll catch up with you soon. Take care.